Let's talk about how to write off your clothes as business expenses, because look, when you become self-employed or a business owner, then you have so many tax deductions that are available to you, including writing off your clothes. Now, here's the deal, okay? There's a right way to write off your clothes, and then there's a wrong way to do it as well. And of course, we want to follow the correct way so that we don't get into any trouble with the IRS. And if you watch this entire video, then not only will you have a strong idea of how to write off clothes, but you will also gain a better understanding of how to take other tax deductions as well. So in this video, what I want to do is cover the fine line between what you can and what you cannot write off, and talk about how to write off your clothes legally and the types of clothing expenses that you cannot write off. So if all that sounds good to you, then please do us a huge favor by liking this video while the intro plays. What's going on, everybody? Welcome to our channel. I'm Sean with Life Accounting, the accounting company that helps you save on taxes and build more wealth. Okay, let's do a quick primer and talk about number one, the fine line between what you can and cannot write off. So once your business entity is established or you become self-employed, then the tax system really starts to open up for you, because according to section 162 of the Internal Revenue Code, you can deduct all ordinary and necessary expenses paid and incurred during a taxable year to carry on any trade or business. And the ordinary part means the expense is common and accepted in your industry, and the necessary expense part means that it is helpful and appropriate for your business. And that could be stuff like, okay, equipment or office supplies or your home office or your cell phone expenses, your cost of goods sold, or salaries and wages, and a lot more. So let's go ahead and say, for example, your business made $100,000 in revenue last year, but you incurred $50,000 of ordinary and necessary business expenses. Well, in this case, your taxable income after taking expenses as tax deductions will be $50,000, which will significantly reduce your tax liability. Now, of course, that is an oversimplification of how things work, because the IRS is strict, okay? There are rules, there are exceptions, and there are exclusions for various types of business write-offs. Which, by the way, if you need help with tax planning and you want to work with a tax specialist, then check out the first link down in the description below for more information on how our team can help you. Okay, let's go ahead and move along to the meat of this video and talk about number two, how to write off clothes. So in order to legally write off your clothes, there are three general rules you should seek to satisfy. Okay, the first rule is something that we talk about on this channel all the time, because the best tax write-offs are often awarded to business owners and investors. And so that applies here, because in order to write off your clothes, you must be self-employed, which means that if you are a normal W-2 employee without ownership, then it's more likely that your employer will provide clothing for you. Or in the worst case, you'll have to eat the cost and pay for your own work clothing or your own work uniform. So that's the first rule, okay? The second rule is that any clothes you write off must be worn for work, and that should be obvious. For example, a doctor's scrubs are a really clear-cut example, because those scrubs are necessary for the doctor to do their job. Or another example would be a construction worker who wears a vest or has on safety boots or wears work gloves as necessary clothing items. So the bottom line here is that whatever you wear must be tied to your ability to perform tasks and earn income for your business. The third rule is that the clothes you write off cannot be suitable for everyday wear. And this is what disqualifies most clothing expenses. For example, a real estate agent may buy a nice suit to show properties as a means to impress their clients and close more real estate deals. But that same suit can be worn in other circumstances, such as attending a fancy dinner date. Plus, no one who sees the suit will be able to immediately identify that they're a real estate agent agent, so that suit would not be tax deductible. Okay, another example could be a young social media influencer who buys a nice dress in order to take fancy Instagram photos. Well, that also would likely not be tax deductible because that dress can be worn for other occasions outside of taking Instagram pictures. Whereas if we go back to our earlier example and look at the construction worker, well, that construction worker would likely not wear safety boots to a casual dinner. And if he or she did, they would probably be asked, okay, are you working right now or did you just get off work? Now, all that being said, there are still some potential cases where real estate agents and influencers can write off clothes. So let's explore that a little bit more with number 3. What types of clothes can you write off? So I want to take a look at 4 categories where writing off clothes are generally acceptable. The first one is something that I call specific clothing and costumes. So people who are in entertainment, you know, musicians or dancers, actors, actresses, and so on, can easily deduct the cost of specific clothing and costumes and accessories that are not suitable for everyday wear. And I read a story from entrepreneur.com that shared an example of a Las Vegas showgirl who was trying to write off costumes that she purchased for all of her performances. But for whatever reason, I believe the IRS told her that she could not deduct her clothing expenses. Well, to prove the IRS wrong, the woman decided to show up to her audit in one of her costumes and said, "Where in the world do you think I could wear this? I can't even sit down." And needless to say, she won her audit case. So I added the specific clothing to this part as well, because if there is an outfit that you literally cannot wear anywhere else and that outfit helps you to generate income, then that could be tax deductible as well. For example, a female YouTuber who buys gorgeous prom dresses and only wears those dresses to film it at high school proms, well, then she could argue that is a necessary and ordinary expense for her YouTube channel. Okay, the second category is promotional attire. So this is how most people are able to write off their clothes, okay? Because any clothing that promotes your business can be deductible as a promotional expense. Okay, that means that you can take the cost of the clothes and the cost of adding your business logo to the item and then claim that as a tax deduction. For example, if I were to put my business logo on this tie, then I would likely be able to claim that as a tax deduction or a promotional expense for my business. The next category is something that we touched on a little bit earlier, which is protective clothing. So these will be clothes that protect you, your customers, and other employees while performing work-related tasks. So going back to our example earlier with construction workers, well, if they wear hard hats, those can be written off. Or surgeons who wear goggles and gloves can also write that off. Or people who wear suits who are working in extreme environments or temperatures can write that off. Okay, all these are examples of protective clothing that are easily tax deductible. The final category where I think it would be safe to write off clothing would be uniform expenses. So this ties in closely with the promotional clothing category, but uniforms are their own separate line item on the tax return. So essentially, uniforms that are distinctive and not suitable for everyday wear will be considered to be tax deductible. For example, if your company requires employees to wear a polo shirt with the company logo on the shirt, well, that shirt can be tax deductible. However, if the uniform requires that employees wear black pants, well, that portion, even though it's considered to be part of the uniform, is not tax deductible because those black pants can be everyday wear. So to make all this crystal clear, let's look at the fourth part of this video with number 4, what types of clothes are not tax deductible. So the first big one that most people are unsure about is professional clothing. So remember, since professional clothing like suits, dresses, and polos can be worn outside of work, those are generally not tax deductible. Another popular question is from content creators and YouTubers asking if they can write off clothes that they wear specifically for their YouTube videos, because typically if you wear the same clothes or the same outfit, then people can easily identify your channel and who you are. Well, there was a story of a case where a TV news anchor tried to deduct clothing for clothes she purchased per the guidelines of her employer for the TV show. However, because the clothes were suitable for everyday wear, she was disqualified from being able to take the clothes as a tax deduction. So just because you only wear one outfit for your social media posts or your YouTube channel, it doesn't mean you're able to write off those clothes, because those can be worn as everyday wear. On the other hand, you may be able to justify the clothes worn for your content if your brand name or your logo is on it. So you probably get it by now, but look, even I have to admit that the rules when it comes to deducting the cost of clothing can be confusing, as a lot of gray areas exist. So I think it all boils down to asking yourself one big key important question, which is, are you willing to defend and substantiate all your expenses that you take against your taxable income in the event of an audit? Because remember what we mentioned earlier, the tax deductions you take must be ordinary and necessary for your business. So if you find yourself in a gray area, then maybe you can justify your reasoning by having documents and evidence for the need that expense exists for your operations. And here's another important question you may want to know the answer to as well, okay? Because what happens if the IRS audits you and they don't accept your clothing expense or any tax deductions that you claim? Well, in most cases, unless you have intentionally committed fraud, then the IRS will simply increase your taxable income and you will have to pay taxes on the before and after difference of your income. So going back to our example from earlier, if you had $50,000 in taxable income after you took all your tax deductions, but then the IRS came in and said all these tax deductions cannot be claimed, so then your new taxable income was the $100,000 again, well, you would pay taxes on that $50,000 difference to the IRS. Okay, so I hope all this made sense and you enjoyed the video. If you have any questions, then please write them down in the comment section below. Okay, coming up next, we have 2 more videos that talk about tax deductions and tax strategies. So make sure you check those out if you haven't already, and I'll see you over there.